I think anyone who tries to short Tesla, you know what? I'm going to send out some funeral invitations.
How much have Tesla short sellers lost since the stock made its public debut back in 2010?
A lot of people are short Tesla and they just get caught. And I don't understand why short sellers are so stupid. You just don't short Tesla.
All that and more. So let's get to it. TSLA's got some movement in the pre-market, teetering between positive and negative. Currently, Tesla sits at 262.40, almost a 50% gain in the last month. What could possibly be making this stock rise so much? I think it's time to bring in an expert. Not just any expert, the expert.
In case you missed it, Tesla's on fire again. In the past 4 weeks, the stock rallied 54%, with the company's market capitalization climbing from $544 billion, where a lot of people thought it was very expensive, to north of $836 billion. That is staggering. With today's 3.7% gain, it's now up for 10 consecutive sessions, people. In fact, when the stock finally bottomed back in April, it was down 44% for the year because it felt like everybody had given up on the American electric vehicle industry. But after its recent run, Tesla's now up more than 5% for the year. Those who shorted it down there, they've been crushed.
That is an understatement.
So what the heck happened to get Tesla stock behaving like the old self again? And more important, can the stock maintain its momentum? First off, Tesla started roaring when Elon Musk won approval for his enormous $56 billion pay package last month. I mean, there was a real feel that Musk might lose the vote. And, well, look, let's just say if he lost it, a lot of investors were very worried that he might end up devoting much less time to the company. That's an existential threat that was averted. No matter how you feel about Musk, if you're a Tesla shareholder, you want him working full-time at Tesla. So once he got his pay package last month, it got rid of a major source of uncertainty, and that indeed is what kicked off the monster run.
He doesn't have his pay package. He's gotten reapproved by the shareholders, which is a vote of confidence. But regardless of how this vote would or wouldn't have gone, Elon Musk isn't going anywhere from Tesla.
Number two, we know the electric vehicle business isn't doing great for anybody, including Tesla. But Musk is a master showman, and he's apparently gotten his investors to look past the current state of the core business. Instead, he's directed their focus to Tesla's future initiatives, especially autonomous driving, robo-taxis, that's very big, and energy storage. He was already doing this back in April when Tesla reported first quarter results that fell short of expectations. But the stock soared in response as Musk talked about these new technologies, including a robo-taxi debut event on August 8th. I would call that to be a much anticipated event, but that's just too much of a cliche. Along the way, there have been some incredible wins, but they're incremental, but I think they're big, that make the future initiatives seem more plausible. Like when Tesla won approval to deploy its, quote, full self-driving system in China in the final days of April. I thought that was incredibly significant. So Musk got investors to focus more on what's to come rather than what's happening right now. And that contributed to the first portion of the stock's huge move.
You can buy an EV. Or you can buy a Tesla. Grouping up Tesla into the rest of the EV market, you can do that. I just wouldn't advise it. They are two separate things. Mainly because Tesla is not just an automobile company, but their products are vastly superior than any of their so-called competitors. I don't want it to be true. It just is.
That brings me to item number 3. It helps that Tesla's core business has finally started to stabilize. Now, last Tuesday, the company reported second quarter delivery and production numbers, and they actually surprised to the upside. Nearly 444,000 deliveries. Wall Street was only looking for 439,000. Hey, listen, we'll take it. Now, in a vacuum, that's not actually a great number. It represents a nearly 5% decline year over year. But everything's relative in this business. Not only was the deliveries number better than expected, it was also an improvement from the previous quarter, where deliveries were down 8.5%. In fact, when you look at the quarter-to-quarter comparisons, Tesla's deliveries were up 15%. At the same time, the second quarter vehicle production number was just 410,831 vehicles, and that was way below deliveries. Positive, because it means that Tesla won't have any inventory problem. Too much unsold merchandise means you need to start heavily discounting your product. By the way, Tesla doesn't discount. Fortunately, now that's off the table.
The lull in production and deliveries is because of some retooling for future products. If you honestly believe that their deliveries and production numbers have been slowing over the past few quarters because nobody wants their products, you must be smoking the glass. Vehicle growth will return to form, and along with it, so many other opportunities for revenue because of their patience and unrelenting resolve to disrupt themselves before someone else is able to do it. Quite exhausting work, but in the end, the proof will be in the pudding.
Fourth, there was one more item in this second quarter update. Tesla deployed 9.4 gigawatts of energy storage products in the quarter. That's something Morgan Stanley auto analyst Adam Jonas called a show stealer. He was expecting barely more than half that. Remember, we have endless demand for electricity from all these AI-powered data centers, and companies want to use renewables for that energy. But wind and solar aren't reliable unless you got storage, which is where Tesla comes in.
Ding, 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 ding. Tell him what he's won, Johnny. Your mother. Right. An absolute show stealer, which will be on display in the earnings call. Get your popcorn ready.
Finally, there's one more reason Tesla's been roaring, and I'm less excited about this one. Retail investors have fallen in love with the stock again. We've seen the meme stock cohort try to make a comeback. They attempted to resurrect GameStop back in the spring, and it didn't last. They got crushed by the pullback in crypto. Roaring Kitty tried to bull up Chewy, and that rally didn't even last a day. And by the way, I'm pro Chewy, but we like to remember at 19. And that's why I think many of the memesters have returned to their first love, which was Tesla. You can see it when you look at the volume in Tesla's options recently. That's where the action is, the options. The most aggressive home gamers have found their way to options over the past couple of years, especially very short-term options, even ones that expire in a day or less. Early last week, we learned that options traders have become the most bullish on Tesla that they've been in 3 years. Just yesterday, CNBC's Jason Gewirtz noted that Tesla's options volume was double the 10-day average. That is a tremendous insight most people missed. All that has really helped push the stock up from behind the scenes.
I don't know about the memesters' first love. I know this is my first love when it comes to cars. And this relationship has been so fruitful, I've moved to energy storage products, solar panels on the roof, Tesla insurance, Tesla Electric. This company has successfully integrated almost every aspect of my life. Forgive me if I don't think we get a 50% move, because retail investors have fallen back in love with it. Get the f out of here with that nonsense. Options activity has been a little bit high. How? I've been participating in it myself. But these 4 points that Jim has laid out is basically the overwhelming resolution of the entire street. It's a pretty fair analysis. But what does it mean?
Honestly, who knows? The bulls are certainly in charge again, and given the way this thing's been trading, I think anyone who tries to short Tesla, you know what? I'm going to send out some funeral invitations beforehand to those who want to short it, just so they have them on hand.
We're going to turn our attention now to Tesla. Short sellers are feeling the brunt of the stock's recent rally. A growing number of hedge funds had piled into short bets back in June. And according to data provider Hazeltree, about 18% of the 500 hedge funds that the company tracks had a net short position on Tesla as of last month. And that is the highest percentage in more than a year. Since the beginning of June, Tesla's share price has now soared around 40%. So bad news for those short sellers. How much have Tesla short sellers lost since the stock made its public debut back in 2010?
Right now, it's above $60 billion. I think it hits around $63 billion as of right now.
Damn, that's a lot of money lost. What could possibly make you want to repeatedly throw your money away? I suppose you'd have to be insane. There really is no other logical explanation.
$63 billion. Is it just too expensive for anyone to be betting against this company, regardless of their fundamentals?
Well, short sellers have been up and down in this name over the past couple of years. It was the number one short in the market. Now it's down to number 4 behind NVIDIA, Apple, and Microsoft. So there has been a little bit of give and take in the name. But short still, this is like the OG short. Everyone's still in it.
Yeah, Ihor, that's what I wanted to ask you. Just how often do you see traders, investors shorting a name like Tesla? When you take a look at this activity that we see now, comparing that historically, is it anything really out of the ordinary? It doesn't sound like it.
Well, we are seeing some short covering recently. I mean, there's been a little bit of a squeeze, short covering going on, and it's a really important name for a lot of hedge funds, because this is the volatility that people are looking for in order to make a good profit, in the name, because you can get big bang for your buck.
So
So is this Tesla rally merely a short squeeze, or is something else driving the surge? Let's take it to our leadoff panel. With us tonight, Deepwater Asset Management Managing Partner Gene Munster and Gerber Kawasaki President and CEO Ross Gerber. Thank you both for joining Last Call. Gene, let me kick it off with you. What do you think is behind this surge in the stocks?
I think investors are starting to fill in the blanks. The deliveries will be up 8% in September, another 8% in December, double digits in calendar 25, and probably 20% in calendar 26. So I think we essentially, the first piece to this rally is related to just investors understanding that we're going to see accelerating growth rates. And then you layer on this opportunity that Elon's been talking a lot about with AI, and you outlined some of those. There's another piece that was not mentioned, which is just the fleet opportunity in AI. But you start piecing together, investors can understand that the profitability profile of this company can be much more attractive in the next few years as they roll that out.
But Gene, if you're looking at Tesla's market share here, what we're seeing April through June is that the market share dropped below 50% for the first time. There you're seeing the market share standing at 49.7%, according to Cox Automotive, where last year it had almost 60% market share in the same time frame. What gives?
I could give a shit about EV market share. That's small potatoes. What is the market share of vehicles overall? Is Tesla improving in that arena? How much market share are they taking away from the internal combustion engine? That's the number I want to know, and if that number is continuing to grow.
The market share, in my opinion, is less important. What's important is the growth rates. And ultimately, their market share started at close to 90, 100%. And the expectation over time was it was going to drift lower. The highest traditional car company has about a 15% market share in the U.S. I think ultimately Tesla can have a 20, 25% market share. So I've expected that number to be drifting down, and I'm more focused on what the growth rates are. And as I mentioned, they should be accelerating in the months and quarters and years to come.
Couldn't have said it better myself.
I want to address the idea that Tesla's going to sell a lot more cars over the next 2 years without using levers like advertising and not having any really new vehicles or a refreshed Model Y. So I would push back and first say all the analysts have been wrong with Tesla's numbers over the last 3 years, and they've been substantially lower than what analysts and even what Tesla expected. And I just don't see why sales would accelerate greatly with the current strategy.
The ability to pivot in the face of a new challenge is indeed the hallmark of a champion. With the advancements of artificial intelligence, it would appear that the robotaxi is much, much closer in Elon's eyes than ever before. Money managers like Ross, who are invested in Tesla for the incredible growth, want to see a Tesla in every driveway, want to see advertisements on Monday Night Football, and only see what's right in front of them. This particular course of action makes the most sense to them. Why, pray tell, is Tesla not following this same line of thinking? Yo, Elon, you're doing it wrong. The sheer audacity is flat out staggering to me.
The delivery numbers were obviously down year over year, so celebrating that, I'm still sort of like, okay, it wasn't as bad as expected, but at the same respect, they were giving away cars for a whole month with ridiculously low financing deals where Tesla lost money on those cars. So what I think the real thing is a lot of people are short Tesla and they just get caught. And I don't understand why short sellers are so stupid. You just don't short Tesla. Like how many times have they lost? I mean, just because I'm unhappy with Tesla and I might sell a little bit of my stock has nothing to do with going short one of the most innovative, important companies of our time. So, I just want Tesla to get its act together. But by far, there's so much more that Tesla can do in the future if they really just focus.
It never ceases to make me laugh. Yo, Elon, you're doing it wrong.
What about robotaxi in the near term? It's like everybody's holding their breath over this big reveal.
Yeah, definitely. So the expectations are most people are expecting 2 vehicles. I'm expecting 3 vehicles. I think 2 of those will be related to something robotaxi. And I think it probably is going to add some noise to 2025 because they're not going to be in production or much production in 25. But that's where you get some of that better acceleration in 26. And so think of this as just a building block piece. But Ross is right. They haven't had really anything exciting on the car front. The Cybertruck has been a dud.
What? A dud? It may not be in high volumes yet, but let's agree to disagree.
And by the way, the Cybertruck's not a dud. I drive it, and I'm telling you, every kid in this neighborhood is dying to get in this car. So it's a pretty popular vehicle.
And it's out for me. I don't need no more kids in the car.
I'm more popular than Disneyland or Legoland right now. So, but that said, it's a hard vehicle to produce. I've already dented mine, and there's only one place in California to get it fixed. It's like, the vehicle wasn't really complete when they did it, but a lot of the buyers are people who would otherwise buy a Model S or X. They're Tesla owners who are buying the Cybertruck. It's not new people who haven't bought Teslas before. And that's, I think, the failure of the Cybertruck is not expanding the market for Tesla customers.
Is it just me, or can you hear the irony? On one hand, he's saying this thing's more popular than Disney or Legoland. Every kid on the block wants to ride in the Cybertruck. Sounds like you're capturing the minds of the next generation of buyers. But I do believe he's accurate about the right now. Those people buying Cybertrucks today more than likely are previous Tesla owners. Hell, given the reaction from the children in the block, and everyone's reaction all over the world, it's only a matter of time before more and more individuals decide to buy Teslas because of the Cybertruck. In conclusion, our stock analyst expert Jim Cramer gives his thoughts on Tesla's epic run, sending out funeral invitations to short sellers just in case they need it. Over $60 billion of losses since 2010. You gotta really hate money to be shorting Tesla stock. And Tesla bulls still remain divided. Some remained confused about why the stock is popped anyway. As the vehicle numbers improve, other aspects of Tesla's business is going to fuel this growth in the stock price. We are going to witness in real time the transformation of this automobile company into something much more grand, a transformation much like Amazon as a bookseller to what it is today. Tesla will continue to make money hand over fist, piling it up and then expanding operations worldwide. This is going to be like an enormous avalanche across the land. Anything caught in its path will get swept away, including short sellers. I remain steadfast that in a decade's time, this will be the most valuable company on the planet, and all I can do is buy as many shares as I can today, sowing the seeds now so I can reap the rewards later. That's all I've got for you today. Be easy. Peace.